Okay, and this is the segment for dollar CAD. Dollar CAD is now in focus for a host of reasons. It's still moving with oil prices, but less than beforehand. So if we see announcements from Saudi Arabia, Iran, Russia, or inventories, we usually expect some kind of reaction in the Canadian dollar, but these reactions could be limited, okay? They could have more impact if they go with the trend, but not against the trend, okay? So it's not, oil prices do not control the Canadian dollar. They have some influence, but do not control. Okay, it's important to remember that the economy was hit by those wildfires in Fort McMurray, but it recovered afterwards. So on a quarterly basis, the economy squeezed annualized 1.6%, which looks quite bad in Q2. But in June, when these fires were won over, the economy did recover. So these could be mixed figures. It's important to watch that. The dollar CAD, I mean, the Canadian dollar did enjoy the weak US non-farm payrolls because it sort of lowered the chances of a rate hike, and that means more economic activity in the US. I mean, absurdly, it's good for Canadian demand. Canada is the only Western government, well, we can count Japan, but I mean, yeah, in North America and in Europe, that is busy with fiscal stimulus, something that will be a big issue tomorrow in tomorrow's ECB meeting, something that is really lacking in Europe. The Canadian government, led by Justin Trudeau, is going on a fiscal spending spree. It'll be interesting to watch more in the long term. Another thing worth mentioning that I didn't put here in the slide is that the government of the province of British Columbia, where Vancouver is, and Victoria, on the west coast of Canada, they decided to add some property tax, trying to curb demand for the bubbling housing sector. It did cause lots of action in that local market. Let's see if that impacts the economy. So if you hear specific news about that, it's worth, if you're trading the Canadian dollar, it's worth following house prices in Vancouver. Okay, for more details now on what's really coming up next, today at 2 GMT we have the rate decision. I would say no changes expected. That's the easiest part to say. The big question is, what will they do? Okay, they want to see, like many other places, a transition from mining, let's say in Australia that is, in Canada it's mining of oil, tar sands, and to other areas of the economy. This might be happening. The exchange rate is helping a bit, but perhaps not enough, not in the pace that they would like to see. The economy in general is stable. There are no inflationary pressures. So the weaker Canadian dollar did push inflation a bit higher, but still very much in control. No worries about that. Employment, we had a few disappointing reports, but all in all, the unemployment rate at 6.9% is not a disaster. Okay, so the Bank of Canada should sort of paint a balanced picture. Stephen Pelosi, the governor, is optimistic in general, positive, not very, no doom and gloom. So we could have sort of positive statement, no hints about rate cuts anytime soon. The interest rate in Canada is 0.5%, and they said in the past that it could fall to minus 0.5 as an option. But I think that with experience from other countries regarding negative rates, they will not be the next central bank to jump into that territory. Let's put it this way. Okay, also today we have the IVPMI. Again, this shows the relative strength of the Canadian economy. This Purchasing Managers Index shows growth. It was at 57, now expected to slide to 56.3. Very well into solid growth territory. And tomorrow we have the oil inventories again. Correlation between oil and CAD has somewhat weakened. Okay. Next up, Friday jobs report. It stands out this time because it isn't attached. It doesn't release at the same time as the US jobs report is released, and it has all the stage to its own. A bounce back is expected and much needed. So if we'll have another fall in jobs, it'll be very worrying, because last time we had over 30,000 jobs lost reported, okay? 18,000 are expected. Last, actually, 2 reports were quite weak. Again, if you see changes in the jobless rate and the unemployment rate, you have to watch out also for the participation rate. It might be mixed. And in Canada specifically, it doesn't only matter how many jobs were gained and or lost, but the composition, full-time against part-time. Of course, more part-time jobs is not so good. Full-time jobs, of course, are more welcome. So if you have, let's say, 30,000 jobs gained, but we have out of these, I don't know, 40,000 part-time jobs gained and a loss of 10,000 jobs, that's actually bad news in the details, even if the top line is positive. Okay, just an example. Of course, there can be other compositions. Anyway, after a few bad months, we should expect a bounce in jobs in Canada. Okay, and before we move to the ECB, just to complete this segment about Canada, let's once again look at the Canadian dollar chart and mention the levels. So we'll have this thing complete. Very nice technical behavior there, 128.30 support, further support 127.50, and I would say 126.30 out of this chart. On the top side, 129.10, 130, and 131.40. One of the favorite technical pairs to trade, and a very busy week ahead. And also the whole month of September should be interesting. Okay, so